Thursday, October 16th.
As you know from our workshop materials, this is a class that you can jump in on at any time. So if you have friends or family that want to join us, bring them back in 2 weeks. We'll be having another class. This is session 2 out of 6. So at the SBDC, we are an affiliate of the Denver Metro Chamber of Commerce. That's our host, and then we are also partially funded by the SBA. We help small business owners like you in a number of ways. First is free consulting. The second is classes like the one you're at today, and thanks to US Bank and Larry Callan, we're able to offer this whole session for free. And then finally we have, yeah, it's great, it's really great. And then last we have programs that are more long-term, like our Leading Edge class, which is a business planning course for early stage and startup businesses to help them grow. I will ask just a few housekeeping notes that you do fill out our seminar.
Series 2 of 6. The theme for this whole series we've called GPS for Entrepreneurs, and we all know about GPS as we use them to navigate and get around. And we're here for that same purpose with your business, because we know you've got a lot of travels that happen in a business. There's just a lot going on. And we, as trusted advisors through US Bank and through my CPA firm, our CPA firm called Accounting for Success, we absolutely love working with entrepreneurs. At Accounting for Success, we've done it for over 30 years. US Bank, I don't know how long they've been doing it, probably longer than that. So it's, again, we're bringing our passion, our interest, the fun we have of working with entrepreneurs so that you can come and get kind of bite-sized pieces of some of the most valuable information we could pick on each of these topics. And today the topic is called You'll Need More Than an ATM. And it's about being able to, let me see, I wanted to get the title exactly right here, that it's about the relationships, building relationships with your banker, because it's about the people. It's not about the ATM card. It's not about just those kind of behind the scenes services. So I will, be being your facilitator today to work through a really great agenda. You'll find the agenda for the day. You'll find the presentation. You'll find what we call a one-pager with the highlights of the teaching points. You're also going to have an exercise today that Larry's going to work on with you. And then at the end of the session, we'll have questions and answers. So if something feels like you need to ask the question when the presenter is presenting, raise your hand, and the presenter will either answer it or say, you know what, that's going to fit in a little bit later on. So write it down and hold on to it. But we want to be sure you leave with all of your questions answered. The final thing that we're doing, and it's just for your advanced learning, at the very back of your packet that are loose, there were 2 white papers. And we're working to provide you with some more in-depth information for you to take home along with an assignment for homework, because we want you to take what you learned today and work for some practical applications wherever you can. The other piece that we designed in was that we've put our pictures on there with all of our emails and phone numbers, because the idea is you get to call us up while you're working on your homework or you think of something. Again, it's about relationships. It's not just this handout information. So remember that we're here for you. So how many of you were here last week for the begin with the end in mind? 1, 2, 3, 4, 5. I think I counted 6 or so of you. Thanks for coming back. And today, again, we're going to be focusing on all the advantages of having a personal relationship with your banker. It's a casual sort of format. The guys may take off their formal-looking coats and ties as we kind of get into this. If you need to use the restroom, handle a phone call, whatever it is, take care of yourself and just make yourselves at home. So I'd like to begin, first of all, to trusted advisors that are here today. And I'm going to begin by introducing Larry Callan, who's going to be the presenter for today. So Larry, you want to come on up and let these folks know what it is you are so passionate about banking. I'm sure we're all trying to figure that out, but we'll hear it from you firsthand.
An accidental career, but I truly enjoy working with small business owners and finding ways to help them do what they want to do. I've don't think I'd make it as an entrepreneur myself, but I get to live and enjoy and help a lot of people achieve their dreams. So that's what's in it for me. That's why I do it. I'd like to introduce Pete Squires and Andrea Serrell. They are both small business specialists with US Bank. They are going to assist a little bit on the presentation today. They've got some insights that they can share, and I don't know that my voice is going to hold out for the whole thing. So, Pete, Andrea, if you've got a little bit to share about yourselves, and then we'll give it back to Libby.
Well, I'm Andrea Sarra. I've been with the bank for 6 years now. Been a small business specialist for about a year now. Just like to say this is such a great event. Very excited to come and see all of you here. Once again, kind of going to why it is important to have a banking relationship. Oh, sorry.
And I'm Pete Squires. I've been with US Bank for 2 years now. I office out of the Cherry Creek branch, so here locally in Denver. Much like Larry said, it wasn't necessarily a career that I sort of fell into it accidentally, but the reason that I've stayed is because of the role that we have with US Bank, which is kind of the relationship focus, and also because small business honestly just fascinates me. Ideas and you know, kind of new products and services, and being able to help small business owners is something I love to be involved in. And kind of being that old school type of banker as a resource to business owners is just something that I've really found gives me a lot of professional satisfaction. So that's why I do what I do. That's why I'm passionate about this topic.
Okay, Libby, did you want to go over some of the goals a little bit?
Yes, the goals we have today are 3. The first one is about being able to hear examples, hear stories, hear advantages of growing a relationship with a banker so that you can help grow your business. The second one is to understand the requirements from the bank so that they can support your growth. And then the third one is to identify services that they can provide to you through all the cycles of your business. Those of you that were here last workshop, remember we talked about all the different life cycles: startup, grow up, and then transition. And your banking relationship can help you in different ways along the way. So we're going to begin this morning with asking you some questions so that we know, how we can make this valuable to you. And the first one is, what banking relationships or services have been most valuable to you folks in growing your business? Or maybe you're having some frustrations or some things that aren't matching up well for you. But we'd love to hear from you. What's working? What could work better? Got any stories here?
Accounts, and she would take time and explain it. I could go in and work with her. So it's really true. I did have that experience that it's about relationships. I needed a relationship. I didn't want to go to a bank and see faces that I didn't really know. We got to know all of the tellers because we'd go in and make deposits, and so they would get to know us, we would get to know them, first name basis. So it really is all about relationships. And I had great relationships.
Even onto a second generation.
Sure, and at the closing, the bankers were there, and so, there were things that had to be done from our bank to that person's banker. I think we were using the same bank, weren't we, Eric? It was the same bank at the closing, but we had the people who were, the person buying it from us had his banker with him at the closing.
Relationship with our quote-unquote banker is all electronic. So you talk about going and making deposits. All of our financial transactions are all electronic deposits.
So you're like saying, hey, maybe I don't need more than an ATM.
No, it's very frustrating because you go to establish that relationship with the banker, and it's like, a lot of the big national banks, they're big nationals, and they can really, unless you've got tons of deposits or I need all these loans and all of this stuff, they don't have the time of day for you.
Okay.
And so it's kind of that, frustrating because you're not in the bank, you're not seeing the people, you're not going through that process because of the type of business you're in.
Right, so it sounds like,
That type of relationship, there's no loyalty. I could care less where we bank, where we have our deposits, because you don't care about giving us time or.
Maybe you just have the wrong bank.
well, thanks.
The big question is why would anyone want a relationship with a banker? Because we're so cool? Not exactly. But it's because all business is about relationships. And so why wouldn't you want that with your business banking as well? You know, there's three really vital relationships that most small businesses have eventually. Is their accountant, their attorney, and the banker. Person that you'll see in the video later always told me he referred to that as his three-legged stool, and if one of those legs was missing, then the stool's going to tip over. So, you know, that's why it's important. And then I would advocate that you ought to expect your bank to have an assigned officer for you. Now, there may be some turnover, that's fine, but there should still be continuity, and that person should be a business banker, and they ought to be trained in business products. They ought to have some knowledge to back up delivering the service that you need. And, you know, they have to demonstrate a desire to get to know you and understand your business. If you're not getting that, you might demand it, you might coach them into it, but, you know, some people are going to respond and others are not. And to your point, if it's not there, it's probably not the right bank. But Andrea is going to talk a little bit more about this, and she's got a unique perspective because she's been both a personal banker and now a small business specialist. So, Andrea?
Yes, there is a difference between the personal and the business banker. One thing that I'd like to say about our bank is that they thrive on coaching us and giving us the skills to understand our clients on the business side, so that way we have more of an advisory approach for our clients. Definitely a lot of, right here on the screen, you see the things that we basically provide most of our clients with. Larry, do you want me to go into this?
Sure, a little bit. We've got the notes below.
Yeah, one of the things is consistency. As you said, you want to see that consistency. We are big on that, also providing solutions. We don't want you to just feel like you're obviously only dealing with internet bankers online, only able to reach them, sounds like, from an email. Definitely provide risk management tools, and they also help with the financial part. Like I said, being an advisor is more of an advisor role is what we kind of go for with our relationships for being a business banker. And then, you want me to go on?
You can continue on
All
with some of the points in the notes here.
We basically, like I said, do all this with a sense of respect of your business and your decisions. We want to provide mutual respect there for our clients. And one of the things that a business banking officer is expected to maintain is the regular contact with you on a regular basis. Basically not the, hi, how's it going? We want to have those conversations and know what your goals, your inspirations are, your progress and your successes, who your employees are, your competitors. We also kind of want to let you know that, we go from anywhere from entrepreneurs to large corporations. We don't have a medium. Go ahead.
Question for you. You said, you're there for entrepreneurs. From meeting the folks here today, we've got folks kind of in that early startup kind of place.
Right away, from the minute you start your business, your banking relationship with us. We guide you all day. You're going to always have that individual to kind of go through, no matter what your growth is on your business. You'll always have that go-to person.
So what's the path to follow? Say that, like, you picked a bank. I mean, people pick banks. I guess there are a lot on every block, and you could literally walk from one to the other. But if you picked one and the relationship piece isn't working, what's your recourse? What do you do if it's not working?
Well, you want to go with that?
Yeah, I can handle some of that. It's not uncommon, and it's probably expected by people in management that if there's a problem with someone that's working with you, you ought to ask to talk to their supervisor. someone up the line. That's a quick response on that. But as an example, in our small business group, we've got 3 groups, and they're dedicated to different size businesses. So small business specialists really do engage with a lot of the startups, the entrepreneurs, early stage. And we've got clients typically under $2 million in revenue, but borrowing up to $250,000. We've got another group that would handle clients that would borrow up to $2.5 million. So a different level of expertise, more experience, different approach to how the credit is underwritten and looked at. It's very conventional, full analysis at that stage, whereas when you're early stage, a lot of the products that you'll find in most banks are going to be credit score driven, simpler, quicker. That's kind of what the product approach is. It generally works, but not always, and that's the value of having an individual contact. And then for larger companies, above $5 million in revenue, above $2.5 million in borrowing, they would deal with someone that's more low-end commercial, high-end small business. That would be like Veronica Reagan is a relationship manager for us. So we have a full custom underwriting group in Denver that does all the analysis and supports the relationship manager in working with the clients. So at least we strive very much to tailor our service and our personnel to the size and needs of the business. Yes?
And Larry, I just want to say...
At that point, that's why these bullet points on the screen, we don't talk about borrowing money. Talk about other things that we can do to help the business. And absolutely, you ought to expect a relationship to do those things. The next slide, we're going to talk a little bit. Go ahead.
Yeah, my question is
Yeah.
about rules.
Mm-hmm.
How?
To collect electronically, or it might be thinking through different ways that you can set up your collection, whether you require a little bit more upfront. I don't know what kind of business you have and what service, but there are some things that typically come up in conversations.
Just strategically advising.
And I think a good advisor is going to ask you questions, and they might feel like they're prying a little bit. But if they're helping you think through and understand together, I'd say that should be valuable. But that is something that we look at. It's really an unfortunate circumstance anytime that a small business gets treated like the bank by their clients, and they stretch it out on the receivables and they try and take advantage of you. And it really kind of chaps me when big companies do it to small companies. So, those are some general ways that we would look at that issue, but electronic collection is one way to speed it up.
That's through a division of the bank called either treasury management or cash management services. So if you go ask your banker about that, they can kind of give you some advice on some areas through treasury management where you can help speed up your collection of your accounts receivable. Okay.
And I wouldn't dismiss that if you have a good accountant, they might have some ideas on the impact if you were to make offers of discounts for early payments. There's implications of any of these decisions, but it's important to think those through. Libby?
Larry, does the bank offer factoring services?
We do have an affiliate organization that we work with that would do factoring of receivables, and that is a way to speed up collection as well.
What is factoring? What is it?
So that would be basically, in effect, selling your receivables to a third party who would handle the collection. Okay, and we actually get into that later in the presentation, more as an option for financing growth. But yeah, it can be beneficial in the right circumstance. It's not always a bad thing. So, other questions before I hand it over to Pete? Pete's going to talk a little bit about what is it the bank's going to look for and what are we going to look at if you are talking about borrowing.
Sure, thanks. I think that one of the key components to managing a banking relationship from our end is really being an advocate during the lending process, and helping sort of consult business owners on how best to present themselves and sort of tailor a suite of products that make sense for their lending need. So a few things that a bank is going to look at, simply put, are the 5 C's of credit. The first being character. That's essentially the business ownership, the business management. It's going to factor in things like credit history, FICO score, and management capabilities, industry experience, things of that nature. Really looking at the individual or the group that's in charge of that business, and sort of their history with lending relationships. From there is capacity. Capacity is going to be things like your ability to repay the loan, including debt-to-income ratios and things of that nature. It's looking at earnings, it's looking at cash flow, obviously with a margin of safety built in, so that we're not leveraging somebody too much. Plus understanding the sources of that repayment, for example, whether it's coming from straight profits, from collection of receivables, liquidation of assets, things of that nature. We kind of want to see where that money's coming from, and making sure that it's repeatable. Capital is essentially the liquidity and the amount that the owner or the group is able to put forward into the loan. So what it can also include is how much equity that the owner has in the business compared to liabilities. The general rule is set at a 3 to 1 debt to equity maximum. From there, just kind of making sure that, again, that we don't sort of help that business owner into a position of leverage that wouldn't be beneficial for them. The next one is collateral. That's essentially the property or the assets used to secure the loan. We're going to look at what you're pledging, and are there other competing claims to those assets. So, for example, if you put up a piece of equipment to secure a loan or something of that nature, we're going to make sure that a leasing company or something doesn't have a claim on that piece already. And then from there, it's what's the liquidity and the saleability of those assets, and sort of how are they valued. So essentially looking at, are these things perishable goods, or the things that could be turned and liquidated in the event that we sort of needed to use those to help with repayment. And then from there, we go to conditions, which is term rate, principal, etc. These are the requirements that the bank is going to put in place on the loan, for how the funds can be used, any kind of financial covenants, and what kind of financial or collateral reporting is going to be involved. And then again, kind of from there, term rate, that type of thing. So that's kind of in a nutshell how it's broken down. Typically, these are in order of importance, but there can be factors within, for example, collateral. If you've got a lot of your contracts are coming from government agencies, or you're very concentrated in your accounts receivable, that might be the kind of thing that would override a positive check in one of the above mentioned topics. But typically they're in order. Anything to add?
No, you did good.
Questions so far on this? All right. And so kind of dovetailing from there, the factors that are most important for these type of lending decisions, and how do we prepare is sort of a major component of where we're going to be coaching business owners, especially entrepreneurs that are kind of developing into the amount of time and business needed for conventional lending. So one of the first things to look at is repayment capacity. This is going to be based on historical numbers, so profit and loss, balance sheet, tax returns, things of that nature from both business and owner. The idea being that you're looking for a 15 to 25% margin of cash available over debt service. So that's factoring in the debt for the new loan. We want to still see that you're able to maintain that 15 to 25% margin on top of the debt that we're looking at adding. From there, liquidity is essentially cash on hand. This is something that I almost never see with my clients, but it's something that we absolutely recommend, is having that 3 to 6 months of average operating expenses in reserve. Guys, I can tell you firsthand that the vast majority of business owners that I see that go out of business don't do it because they don't turn a profit. They do it because they run out of cash. And it's super, super tempting to say, oh, I've got this huge pool of funds built up, I'm just going to drop it on this equipment lease that I've got, or I'm going to drop it onto my commercial real estate loan to start paying that off. It's so nerve-wracking to me when I see a client do that, because you never know what's around the corner, and it is so important to have that rainy day fund.
I can take it from here.
Oh, sure.
So, one thing about these measures is that they make sense for you as well as the bank. You should be, if you consider you're sitting on the same side of the desk together in your conversations and looking through these things, you really should have a banker that can have an open discussion about why they look at things this way. You don't need the details, but when banks calculate cash available, they factor out non-cash items like depreciation and amortization. Liquidity, now, Pete is right that many businesses aren't to that point, and that seems like kind of a stretch. But Dennis has shared with me, he had some ideas. He's worked through that with some clients and found ways that they could get there.
Thank you, Larry. I'm Dennis Smith with Accounting for Success, and one of the simplest and best ways of just creating that liquidity fund, that fund for a rainy day, is simply to put a percentage of your sales into a savings account. Just pretend like it's not there. Just build it into the practice. And simple things really work out great because you do them consistently. Some of the more useful things, of course, would be cash flow planning, where you're doing budgeting. There's lots of things you can do here to avoid the big problems of lack of liquidity. We call it growing broke, when you grow faster than your ability to fund it. Larry?
Yep, that's a great example. So just remember, liquidity is your lifeblood. That's your safety net and your control, where you're not dependent on someone else. And then lastly, we talk about historical performance from a long-standing experience in the industry. We're historically bound, and so your history is always a very critical factor in what a bank looks at. That's very much driven by regulation. Banks are in the business of managing risk. We're loaning you other people's money, depositors that we have to protect. So it's highly regulated, and we need to understand the risks. Some of the risks that you should expect to talk about with your bank would be, do you have a concentration of customers? What if you lost one of your key customers? What would that mean, and how would you deal with that? What about a disruption to your supplies, or if a supplier had a problem? General economic conditions, specific market conditions, your competition. Do you have enough diversification in the product or service that you provide? We've even seen some cases where there is some obsolescence and substitution that can take place. So those are all risks that you should be prepared to talk about. At this point, any questions? Yes?
What about governmental risks, like they get itchy and pass a regulation that actually hampers your business? It happened recently.
There are a variety of institutional and governmental risks that happen. That may be one, and I don't know what specific regulation you're speaking of, but I spent a lot of my early career financing the agricultural industry, and one of the things we always looked at was what proportion of the farm's revenue came from government programs. Were they really dependent on those programs and the fact that they would actually be funded? So we try and gather the information. Sometimes we have to do it together with our clients to understand, how those risks might actually present themselves.
No, on that aspect.
Yep.
The other risk you can kind of anticipate. The reason
Customer I used to work with in Idaho, and he was kind enough to say that he would share some thoughts with us. He has started multiple businesses. He's been with 2 or 3 different banks. He's going to talk a little bit about how the bank worked with him. You'll find out as soon as he gets going on this that he doesn't pull any punches. I did coach him ahead of time. I said, Rick, this isn't about US Bank. This is just about you and your experiences. So just, be real frank like you always are with us. And I can add a little detail later on. fairly generic. I make a practice of not disclosing a lot of information about my clients, and so this is a unique situation to really talk about this. So he and I have the same shoulder operated on, the same day, same hospital, same surgeon, and so we thought we ought to at least get a picture together for doing that. So let me see if I can get to my video here.
Hello, I'm Bruce Turner. I'm a commercial relationship manager with US Bank. Today, I'm fortunate to be able to introduce you to Rick Harris, founder, owner, and manager of Double H Gas, Inc. Rick is going to share some of his insights and experiences with you regarding his banking relationships and how those have changed over the course of his business. Hi, Rick. Thanks for taking time to share your thoughts and experiences with us today. Could you tell us about what your banking needs were when you first opened the company?
Yes, Bruce. In 1996, I had a dream to start my own business. The area banker with US Bank had heard that I had this dream and called me and asked me to come in and talk to him. After I went in and applied for the bank loan and credit, the bank came to me and said that we could have a $150,000 line of credit. We opened a business checking, and we also got a loan to buy our first truck.
Thanks, Rick. So what was important to you in your banking needs then?
What was important to me was that I had a bank that had a banker that could listen to my needs. The line of credit was very vital to be able to grow at the time of being young in the company. We needed tanks, trucks, and parts to be able to produce for our customers.
Thanks, Rick. And did you have a relationship with a particular banker? What was that like?
The relationship I had with US Bank started out really well. After about 5 years, he started to neglect us, and we lost track of being able to go in and sit down and talk with him. At that point, we had another bank aggressively come to us, and we switched banks. After switching banks, we stayed with this particular bank for 15 years. After 15 years, we had a pre-approved loan for $1 million because we knew that we was wanting to purchase another company to merge in with ours. At the time of the merger, when it came time to do it, our bank that we was using, they stood their ground with a pre-approved loan and denied us access to the money because the banker wanted to tell the lawyers how to run his business.
Thanks, Rick. So as your business grew and changed, what changed in your banking needs and your relationship?
My banking needs with the other bank, they failed to stand up and grow with me. At that point, I was introduced to Bruce Turner and Larry Calvin at US Bank in Idaho Falls, Idaho. Within 3 days, they took my books, went through them, and borrowed me enough money to buy a $1.2 million acquisition. We took the acquisition, we grew with it, and within 5 years was able to pay that back. We appreciate everything that they've done for us. They was able to listen, they was able to take our numbers and to produce for us, which we muchly appreciate. With the growth, we was able to buy this tank, which is able to operate this asphalt plant that we use in the summertime. In the wintertime, we're able to use this tank as a storage for our customers throughout the area.
Rick, I know you changed banks along the way. Without divulging too much of your private business matters, how would you describe your banking relationship now?
My banking relationship now is, I would say, is very good. I have Bruce Turner who takes care of me. He listens to my needs. I can call him, we can go down and discuss our issues. He gives me various opportunities to work with the bank, and the bank will come to us and say, this is what will work for you, let's proceed.
Rick, what are some of the services you're using with US Bank today?
The services we're using with US Bank today is business checking, merchant services, we have a line of credit, we have 2 truck loans for operations, and then we also have a safety deposit box.
Thanks, Rick. Given that you've been in business almost 24 years, Rick, what advice would you give other growing companies on what to look for and expect from their bank?
My advice would be to look for a banker that listens to what you have to say and what your needs are. It has been a pleasure for me to work with Larry and Bruce through the last 5 years, but when I have an issue, I can call them on the phone. They're willing to sit down with me, and they study my business before they come and sit down in our meetings. It is nice to be able to call and meet with some of the other bankers and some of the other branches that they care that you're there and that they always greet you as you walk in the door.
Thanks, Rick, for your good words. Thank you very much for your time and for sharing your thoughts with all of us. Good luck to you and to Double H.
I didn't choose the music. So just a little bit more about what he didn't say. Is there? So again, just a reminder, work with your most recent 3 fiscal year ends, tax year ends, and then your interim statement. Where are you year to date? That's a good place to kind of stop, is it 3 years?
QuickBooks, you can make those changes and then go backwards.
It's all related to your chart, yeah, it's all relates to your chart of accounts, and as you rework your chart of accounts, those financial statements all come into line based on how you edit your chart of accounts. So it's a pretty straightforward project.
Had another question?
Speaking of your fiscal year, is it the calendar?
Earnings statement, sometimes called profit and loss, P&L, so that we know we're talking about the same thing.
That's a lot along the way, but if you haven't come up, you've got right up there towards the beginning of your handout today, the list of all of our pictures, all of our contact information. Call us.
I need to give a correction, I think my phone number is different.
I forgot.
So my landline is 303-480-2255.
Say that again, Larry. It kind of sounds like that, wah, you know, it's just like kind of overload because maybe your business isn't at the place where you need these kinds of services. But know that again, it's about relationships. You've got 4 or 5 of us here to contact with questions, or when you get to that place, you can always come back. And I think what I'll say too, we've talked about why financials are important for the bank, but really they're most important for you. It's for you to start making decisions for your own business, so it's really valuable to do that exercise that Larry gave you. So Eric, you want to tee up our next session in 2 weeks?
Yeah, 2 weeks from today, the topic is fraud. And I think everybody can relate to this now. Every day you read 70 million credit cards, revealed over here, 50 million over there. So the topic is fraud, which is something we can all relate to, the fear of losing money or identity. So we're going to have a great conversation around protecting your financial assets. It's also coming up like with fraud internally. If you have an employee, you might be handling books. We had a client, great client. They thought everything was under control, discovered an employee had embezzled $50,000 under everybody's noses. Good to find out about how that's possible. Also identity theft. We have more and more clients every year who are going to file the tax return, and the IRS says somebody's already filed a tax return and your Social Security number because of identity theft. So big topic. Try and come if you can and bring some folks along. 2 weeks from today, right here.
Absolutely. And please, we really appreciate you taking a minute to fill out the evaluations. We do keep working to improve, and we did take in what you said last time to make some improvements here. So we appreciate you being here, and we'll stay after a little bit if you have any further questions. So look forward to seeing you in 2 weeks, and do bring some friends.